Good day, everyone. Well, you can see that the market has staged a bounce and a pullback of some sort with a couple of distribution days. It's a market that is dealing with a tug-of-war between more QE or continuation of QE because of the weak global economy, which of course is bullish for the markets, versus the weak global economy, which is bearish for the markets. So as far as whether this bounce has any legs, or whether we're going to roll back over, flip a coin, really. I think we're best off just looking at, as we always do, watch the stocks. They tell you what you need to do on a day-to-day basis. You don't need to predict things, and no one knows how to predict the markets. It's, Neil and Etsy Koda and some of these legendary guys who've been doing this for decades, many decades, have always said that the future doesn't exist. So just pay attention to what you know now in the present. Now, as far as well, we've got gold up here. Gold's been rallying, but oil seems to be turning back down. I'll put up USO, and again, it seems to be in a long-term downtrend. This oils and the commodities, but we will have to see if they do find a meaningful floor. I think that'll be predicated on a recovery in the global economy. At present, we're seeing a lot of stress and strain in terms of any sort of meaningful growth in Europe and the UK and in China. The U.S. is seemingly doing no better, even though the reports seem to indicate that things are better. But these reports are manipulated, as we know. So, and the whole world kind of moves together. It's very interlinked. So, it's almost impossible that the rest of the world's going to go into a recession and the U.S. is going to be fine. It just doesn't happen that way. In fact, I've, as many of you know, I've been a long-term student of the markets, and I looked at correlation charts on the global economy back in the 19th century, going back many decades, and even back then there was a very high correlation between major nations. So when one nation got sick, so did the others. And I would argue that even today, even more so, things are interconnected. So I think that the market the global economy is sick, and I don't think there's a lot of evidence right now that it's turning a corner. So I'll have to just sit tight and wade through it, basically. As far as stocks, as you know, there's been only a scant few that have had actionable interests, and those have not really been panning out much at all. We were talking about, I think it was last week, LGIH. It's a home building stock. The group is very strong, and I mentioned that it seems to be getting ahead of itself. And sure enough, it did an about face, and in 2 days it wipes out the gains of 5 days. So this is the market of taking your profits when you have them in context of the chart. We saw some other ones that were actionable that, and these were put on, I think, on this day, like October 5th. So this one never really got going, and then it rolls over. So you have to be quick about taking your profits or minimizing your losses in this kind of environment. Here was another one we put on the list, and it had a good strong day in there. It went sideways. It's a pretty easy sell because you get rid of it when it undercuts the sideways move. No questions. You don't have to sit through that whole correction. And then let's see. We had JCOM. There's another one that did it about face. I think we put it on here on the, where was it? We put it on pretty early in the pattern. Yeah, on this day, on the 5th here. And then again, it's getting ahead of itself in the context of the chart and in the market, and then it does on this day when it does a high, what was this, it was a outside reversal. I would probably been selling the latest at the close there because it's not behaving right. So there you have it. You got to be quick or dead in this kind of market. And as far as the levels of volatility in this market, things look like they're trying to settle down. The VIX is well off its highs, and certainly if the market continues up in a sort of a baby step fashion, it might be sloppy about it, but baby steps, then the volatility will also further diminish. But again, all that remains to be seen. And with that, I will turn it over to Gil.
I think the market's right now mostly in it's a short-term traders market, and it really has been since the end of August, rather, when we had the capitulation low. If we look at daily chart of the NASDAQ, all you're really doing is chopping back and forth in this range, and I suppose you can call it, you want to call this an uptrend. I guess it's an uptrend for a little while, and then you get a downtrend. Looks like you're going to blow apart, and now we're back at the 50-day. So you're really at a point where you could see a failure, and I got to tell you, today's rally doesn't really surprise me, because I think in markets that are faltering, you will see this sort of random upside jack, and it's one of the reasons why I don't carry heavy short positions overnight. If I do, they're generally pretty small, and I'm looking to set up perhaps into any rally here today. So I'm just kind of watching these stocks right now and not really jumping in on the long side, because as Dr. K just pointed out, you're seeing these stocks, if they have breakouts, I mean, you look at something like this. Under Armour was looking good. Here it was breaking out. Just pull this out. You can see it's stock breaking out here, and it fails once, fails twice, and breaks below the 50-day moving average. Now, technically, it hasn't violated the 50-day moving average, but with the stock sitting right on top of the 50-day here on light volume, I would tend to look at this as a possible short sale on a 620 sell. So we could take a look at this here. And if you had a 620 break here, you might be able to come after it and look for it to break the 50-day and head to the 200-day line. Yesterday's action kind of points out or highlights the random sort of rotational activity that you're seeing, where one day you'll see retailers, there's news that Walmart sees flat sales, and retail sales yesterday morning were weak, and then the beige book, when that came out, that seemed to be the final nail in the coffin for the retail stocks, and they all went plummeting to the downside yesterday. You saw a number of these that we've been looking at on the short side. Dick's break down, you saw Lulu come down, but it's sort of hanging along the 10-day. It's really just in a bear flag. If it rallies up to the top here, that might be a short sale spot. And then, of course, Under Armour broke down. Let's take a look at some. Throw me some retail names. Nike's actually hanging in there, moving higher. Notice how it had a Bible gap up, and then it fails, and it just continues higher. But, I mean, this market, to me, like Dr. K was saying, flip a coin. It's just very random. If you get a couple of bucks one way or the other, you got to take it and then back out of the way and see where the next move materializes. It's just very flaky. And to me, this is typical of markets that are probably ready to roll over, but it hasn't happened yet. I'm sort of hanging out after making a bunch of money in August, hanging out here, testing things out, but not making any real significant progress, certainly not like I did in August, and that tells you half the story at least, because when you're making money, it's generally pretty easy. When you're not, things are halting. Things just don't really get any momentum either way. So you can see we chopped down below the 50-day moving average on higher volume. So this actually looks like trouble yesterday. And of course, we get the random jack because Wall Street Journal writes, at least that's what I've heard the rally is being attributed to, the journal writing that the Fed is on hold through the rest of 2015, which doesn't surprise me. You guys know I've been saying that they're not going to raise rates. And there's really no way they can. And so in the process, you're seeing gold take off. And people ask, okay, do I buy this? If the market gets into trouble and they start selling everything off, they're going to take gold down with it. I mean, Dr. K, would you be buying this move in gold coming up to the 200-day on a pocket pivot yesterday?
Yeah, I mean, absolutely not. The thing about GLD, what I like about it is that when it sets up, it really sets up, and it's like candy from a baby. You see the buy point; it's very clear with the price volume action. It's been In other words, the weeks leading up to that buy point are very clean. There's very little noise in the pattern, and it's done this since, well, my gosh, it's done this for like 12 years. And these buy points will come once every, I don't know, 3 years, 2 years. They're very infrequent, but when they come, they're very obvious. The last really obvious one was when that was back in 2011, when well, a couple people are coining us the silver bullets, and I thought that's kind of cool because we nailed the breakout in silver, and we also nailed the top in silver. But the same could have been applied to GLD. You know, I'm talking about SLB here, the silver ETF, but GLD was just as clean, and of course there was much less torque and horsepower in the move on GLD than SLV, but nevertheless, the principle holds with GLD. And so, you know, right now I'm seeing in the GLD pattern nothing. There's been nothing to do in GLD for, you know, really since it peaked in late 2011. There's really been scant. It just hasn't set up. You know, compare that to, say, going back to 2009 when you had a very clean breakout on, I think that was on early September 2009. Just obvious. I mean, if it's not obvious to you, you need to train your chart eye. You really do. To me, it's just I'm just looking at these charts, and I can.
Dr. K, I think that was 2010 when it broke out in September, right here. And that's where you had the breakout in GLD and also the SLV, because in September of 2009, let's see.
I'm talking about
sorry.
September,
Go ahead.
Early September 2009 was a great breakout.
Right, you're right.
Yeah, but we had another, you know, there was another breakout, you know, since then afterwards. But I point that one out because it's so clear on. Yeah, and then there was I think there was one in late 2007. I just need to scroll back on the change date thing. But yeah, I mean, it's a good exercise for people to go through the GLD chart and see if they can spot all the breakouts, and they should be very, very clear and clean. Because there was an obvious one on September 7th, 2007. It's just plain as day. And if you go back, you know, if you go back before that, over the last year, the breakouts are, I don't know, there's no breakouts, first of all, but there's no entry points. There's no real clean entries. So I like that about GLD, that it offers that kind of cleanliness to the pattern, so we don't have to wonder, you know, when should we get back in gold. I mean, for me, I assume it's going to repeat history, and if there is a breakout point in the future, it'll be clean like the others. And that's a feat for gold, because gold is a very unclean. The way it trades, there's so many cross currents in the price of gold. What determines the price of gold? It is quite surprising to me that gold can have these, you know, once every 3 year, very, very clean breakouts.
Yeah, and you can see them on the weekly charts where you had the moves. They're generally pretty clean. See here in 2009, and then again in 2010, and silver also same thing there. So I noticed the miners though have been moving. Like you look at the GDX, that's been moving higher, and you see some of these miners. But you know, they're all coming out of patterns like this, so it's very hard to say, yeah, this is where you're going to make a lot of money. And I think that's the big problem with this market, is I don't really see any place where you're going to make any big money. And big money to me is when you can sit with a big position for at least a couple, 3 weeks and make a nice 30-40% move, instead of this chop back and forth where you're basically playing a day trader's game. And then I have to admit, it gets tiring, you know, to make, say, I'm up mid to low double digits here, and for the year, and it's just a lot of work, you know. I think an environment where I'm able to make 50% very quickly is really what I'm looking for, and it's not really there. So either you're extremely patient, you're going to sit with stocks and own them, you know, like everybody, I guess, who's today on TV talking about owning Netflix for the long term. I mean, Netflix to me looks like it's topped. So you've had a big move. You see this head and shoulders type formation here on the weekly chart. Could have been shorted this morning at the open. You're about 6% away from the 50-day moving average. So that's really your risk. For me, that's a little too much. You probably should have hit it yesterday. After hours, it traded down to about 95, and then it rallied all the way back up just below the 50-day at like 110 and change, and then came back in, and today opens up down. But to me, it looks like it's headed lower. So I wonder if we're going to see this market reverse while we're doing this webinar. If it does, Dr. K, you're going to have to take over, because I may have a bunch of alerts go off, and then I'm going to be going after stocks on the short side. Somebody says Dr. K's audio is choppy and I sound clear. Yeah, that's because I'm in the U.S. and he's across the ocean. So, I mean, you know, people are, it's like the guy who complains about no Wi-Fi in a jet airliner, you know, overlooking the fact that you get into this metal tube and you hurtle yourself at 400 miles an hour through the sky to get to a destination that a decade or so ago would take you a couple of months to get to, and you can get there in a few hours. You know, we can bring him in all the way from South Africa, and he sounds a little bit tinny. I'll take it, you know. So that's probably the reason for that. So remember, it's how do they transmit? Does your signal come on a line under the ocean, Dr. K? Do you know? Is that how all this?
This is all us. It's all satellite.
All satellite. So, but still got to bounce around the planet, and so you know, take it for what it is. Live with it. Marvel at the fact that we can actually do it, you know. Dow's up 79 now. Looks like it might be starting to come in. I'm looking for this thing to roll in myself, so I'm not getting excited. Although, you know, you could have grabbed a couple of stocks this morning, made $1 or so, if that's what you're into. And some of those have worked, you know. Facebook looked like a short. I've been pinging it along these highs every time it comes up here. In the last couple of days, you get a point and a half. Today it's coming right up to this high. Is it going to break out? If it does, are you going to buy it? How many breakouts have worked in this market? I would like to know if anybody's bought a breakout recently that's produced some really exciting gains. You know, I often wonder if the writers over at IBD, if when they write, you know, now with the follow-through day, you buy leading stocks, quality leading stocks breaking out of bases. I wonder if they write that with a straight face, because you can look at this market and there have been no breakouts that have produced any significant gains. All you do is get chopped up. And my view is, you know, the definition of insanity is doing the same thing over and over again and getting the same result. Market's starting to come in again. Here we go. I got to check some of my alerts are starting to go off. Give me a sec here. You can see, for example, let me review. Apple is starting to drop. You've already got the cross here, so this looked like a short earlier on the rally. You know, it's coming into the 50-day. It's been living under the 50-day, and the bottom line is this is a late-stage failed base. You know, here's your weekly chart, and it's had a long run, and you failed here. One more rally to just screw everybody up, and then you turn around and one more rally to screw everybody up even more, and then it reverses on earnings up here, okay, and it gaps down. And supposedly they blew earnings away. Now, they come out with earnings in a couple of weeks. Week after next, I believe. The 27th, I think that's the date, right, Dr. K? And everybody's talking about them, you know, having a good quarter or whatnot. But if they blew away earnings last quarter and the thing gapped down, what is it going to take to make this thing gap up? I think it's going to take something magical, you know. So I think the stock is short. And if I have a decent cushion, we're to break down towards the 100 level, I had a decent cushion, I might hold it into earnings. But I've been holding this thing short and working it on the short side and generally holding a small position overnight for a while. And it's just trickling from here. So I think this thing's heading lower. Let's see. Facebook was upgraded. Oh, well, that would do it. Sell it. Sell into the upgrade. CBG looks interesting as a short. Yeah, that's a real estate stock, CBRE Group. It does a lot of the, I mean, because you're seeing this, okay, and what you're seeing is correct. It's had a long run, see that? And now you've broken down, and you're in this bear flag, and you're rallying to the top of the bear flag and the 10-week moving average. So, yeah, it's coming into range here. So if you wanted to test it on the short side, then you'd have to figure out where your stop is, and then you come after the turkey. But yeah, you're looking also, not only is this a late stage failed base, which actually becomes shortable probably as it's busting here. Look at that cascading break. But also, if you pick it up right here, it's pinging, as I like to say. You know, we get pingers and sliders. Some stocks ping right off the moving average, some slide past it and then roll over. And this one's a pinger, but you can also see in the making here, left shoulder, a big, fat, ugly head, a pumpkin head, you want to call it maybe. I don't know, it's more like a Frankenstein head, actually. And then a right shoulder here, maybe a couple of right shoulders. So, but, you know, looking pretty shaky. And you see a lot of these patterns in this market. I mean, let's go do a tour here. Okay, that's looking ugly, but look at this. Boom. Look at this. Looking ugly. I mean, is this a market where things are beautiful? Oh, here's one I love. That's pretty ugly. Mobileye, I still think probably a short. You notice how the pod here, you had the breakout attempt, which is always how a pod will start out. You get a breakout attempt from the right side, but the bottom line is it's had this big move. It can't sustain it. The base is too short. It blows apart. You're rallying up, notice, into the 10-week line. You're just below the 50-week line, but you're at the top of this range. So in my view, that puts this into play here as a possible short sale. So when I look at the patterns, I don't see a strong market. I see a market that wants to be shorted. It's almost begging to be shorted. Now, with all this QE crap in the air, you wonder if they're going to be able to prop this thing up forever. But I got to think at some point it comes apart like it did in August. And I want to be there when that happens, because you make another quick 30% maybe or more on the downside. You know, that's what you're playing for. If I get dinged a couple 3%, that's not really going to bother me, because I'm playing for a big move. And to me, it seems like the only thing this market is setting up for in terms of big moves is one to the downside. And if we keep going through these patterns, let's go through some more. You look at them on the weekly, there's a crappy looking pattern. Here's LinkedIn. LinkedIn rallied up to almost 100, almost 200 this morning. Now it's at 196, so 2 up a buck. It was up like 4 earlier. TYL, somebody's mentioning that one. Tyler Technologies is a nice break. Yeah, that's a breakout, but you know, it's a thin little stock, 231,000 shares. It trades. It's not really one I'm going to play with. So, you know, just like this this one, you know, this was a great breakout too, wasn't it? Look at this thing blow apart. Let's look at some other ones. Cyber, okay, look at this. This doesn't look very healthy. Palo Alto Networks, that doesn't look that healthy. It's kind of hanging in there. Is that a cup with handle, or is it a head and shoulder? Or head and shoulders. Fortinet's another one. It looks to me like it's forming a head and shoulders, trying to rally today. That looks potentially like a short coming up into the 20-day, 10-day moving average confluence. You know, NXPI, even though this thing's rallying, that's where it is. Is that, and it did have a pocket pivot yesterday, so you could have bought that and you get another couple of bucks and then you just bail. Let's look at SWKS. It's down and dirty in its pattern. Look at Jose Cuervo. It's way down in its pattern. Twitter. Well, down in its pattern, trying to rally, but it's a piece of garbage. Is that going to be a big winner? I don't know. If so, you're buying junk off the bottom, and that's all you've got in this market. Let's keep going. Let's see. Solar City's been trying to rally, but look where it is. You know, it's rallied up into this large area of overhead, and maybe this is a short here. It's going to roll back over. So looking pretty pukey to me. We looked at Netflix. You know, that this is starting to look like the head and shoulders. I was pointing that out earlier. F5, did I look at that one? Illumina, here's another one. How's that for an ugly pattern? Disney is stubborn, but notice how it looks like it might be forming you could call this a left shoulder here. Not a very, you know, big left shoulder, but it is sort of a left shoulder, and you get a big head here in the breakdown, and you see a lot of patterns like this where you have a huge breakdown that's associated with the market breakdown in August. And now you're rallying, I'd say maybe even wedging, we'll see how it closes out the week, right into the 40-week line. So this might become a short. My guess is, I've been messing around with this on the short side, and it goes down a buck and cover, and it goes back up a buck, and you short, and it goes back down a buck, and that's what it's been doing the last few days. You can see this as it's kind of churning around the 200-day moving average, but it's not really going anywhere. And it's in position. So, I notice if you study short sale examples from the past, and you study them along with what the market's doing at the same time, you'll notice that when the market's in this sort of phase, you'll start to see things looking like they're setting up on the short side, but the market might start to look kind of strong. And this happened actually in late December 2007, which is an example I've used many times as someone that this current market strikes me as being similar to. And so when you start seeing this, that to me, that's telling you where we might be headed. Okay, and so that's why I tend to lean towards the short side. I don't know if I'm necessarily going to get a lot of love from it right away, but that's okay. I can just kind of hang and wait for my spot and then come in real heavy when I think we're getting it. Maybe we're getting it today because I'm seeing a lot of stocks pushing right up into areas of resistance today, even though everybody's getting excited about what's happening today. Somebody says, I use failed breakouts as shorting opportunities with the help of the trusty 620. Yeah, I think that works really well. So watching Facebook today, let's bring back our trusty 620 chart. It's a breakout, but so you're watching this. If you get a 620 sell, then you come after it, and the odds are pretty good that you might make some money on it, and it might break down at that point. Now they come out with earnings, I think at the end of the month, I think on the 27th or 28th of October, and that might be, the kiss of death for the stock. What you're looking at now with Facebook is a company selling at 75 times estimates, but it's going to just start growing at 20%. And then now they announced yesterday a new video product that's going to, I guess, compete with YouTube. I think YouTube's got first mover advantage, but they're dropping in terms of subscribers. I think they're probably saturating the way that Netflix is. And there was a poll or survey that Snapchat is down #1 among teenagers for social networking, and Facebook has dropped to #4. So we'll see what happens. Somebody says, Gil, thank you for recommending Livermore Wyckoff books. Very helpful. Also glad to have gotten started in this market environment. Difficult, but learning a lot. Love you guys. Pastor John. Thank you, Pastor John. See, we get all types of people here. Pastors. I think the Pope is even a member too. Yeah, I think it's hilarious. Okay, I'm going to go off, you guys, so just close your ears if you don't want to hear it. But to me, it's almost comical to listen to this new Pope talk about how capitalism is evil and blah, 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 when the Vatican has so much money and is one of the most wealthiest sovereign cities on the freaking planet. And I remember Bill O'Neill telling me a story, and I think this was back in the 70s, where the Vatican contacted them and wanted to set up a trading operation. So Bill sent some guys out with computers, and they set up a trading operation in the basement of the Vatican. And as Bill tells the story, he could tell fairly quickly that there was something really funny going on there, like money laundering. And later on, there was this bishop, I think it was Bishop Marcinko, who got busted for money laundering in the Vatican. And so, for this Pope to be battling about capitalism being evil, it's really a joke. But we've kind of reached a point in the world where, in time, whatever, in history, where things have just gotten really absurd. So the economy's so strong that the Fed has to keep rates at 0, et cetera, et cetera. It's not the thinking that makes the money; it's the sitting and waiting that makes the money. So tell me something I don't know there, John. I think sitting longer than a day, probably, unless you can consistently day trade. You were going to say something, Dr. K?
Yeah, I was saying, I think this has been true since the dawn of man, since the dawn of politics. Assume that what someone says is not what they're going to do, or where the truth lies. That's why. I think everyone here who's been at ground zero to a news event and understood the players involved, etc., we're probably quite surprised to see the news accounts, how the media accounted for it was so erroneous and false or misleading. That's just the nature of the world. I think just unfortunately where much of humanity is still needs to grow and evolve. All this politics and world domination and power mongering and etc. And the Vatican is certainly one of the biggest culprits of power mongering and control. But again, I would not leave out most other nations under that same label. So anyway.
Okay, that will constitute our official rant for the day.
You're getting down off the soapbox.
Somebody says the Pope has become a politician. Too bad. I agree. Too bad. Okay, what's going on here? Market's up 92. It's kind of blopping around. I don't know. We'll see what happens here. I'm getting tired of this. I tend to think now my time would be more productively spent either surfing or golfing or both, rather than watching this to try and make a measly 5%. Okay, what else do you want to look at here? We looked at LinkedIn. Oh, how about Shop? Here's great. Here's a breakout attempt that fails, and that was even a pocket pivot breakout attempt, but it failed very quickly. Now this thing's looking like, whoops, let's go over here. Get so many charts, so little time. It's starting to look like a double pod, an IPO double pod. There's an example in our first book of Trina Solar as a double pod. I'm going to check that out, and it's on page 261, I believe. But anyways, now it's living under the 20-day, which would make it a short if it wasn't so darn thin. It trades 321,468 shares a day based on the 50-day moving average of volume, and it's hanging out in a little bear flag under its 20-day moving average. Normally, the way a pod will work is once the stock drops below the 20-day, doesn't have to break the 50-day, that becomes a short sale point. So you come after it there. So, if you're going to trade, and I write in the new book, because one of the old rules was you only want a short stock to trade 1 million or 2 million shares a day. Well, that's not really true. That's mostly if you're not going to run a huge position. If you got a smaller account, you're going to do 100 shares, you could do it because you can get out of that reasonably quickly, maybe even 1,000 shares on Shop. But I remember the other day when it started moving up, I forget which day it was, and I came in to buy 25,000, and that was very difficult. And I ended up pushing the stock up like 40 cents, and then everybody probably saw my big order on the intraday chart, and they all come piling in, and then I sell it to them. So somebody says 4. It's actually F-O-R-E if you're using the golf version of 4. Okay, I've been putting some shorts out. I'm getting up there now. Yeah, it's starting to turn just a hair. We'll see if this works. I don't know. If it doesn't work, I just run away. So I'll take a 1 to 2%, usually 1% loss real quickly if that's what happens. So I'll back away. And I try to keep, what I'll do in general is if I get short and I'm shorting into a rally, I want to keep my overall risk in the portfolio to about 2%. When I'm putting shorts out, as they're rallying against me. So once I start getting near that number, I'll start shuffling out, and maybe I might come back in if things roll over again. But it's very important on the short side to try and control risk without letting things get too far out of hand. Just to make a note. Chinese internet stocks were looking like trying to bottom, shorting Baidu and VIPs at 50-day. Let's take a look at Baidu. Yeah, I mean, this thing's a piece of garbage. Look at this pattern. I mean, that's ugly. Is that a bull market stock? I don't think so. And here it is stalling out at the 50-day moving average. And I mean, just looking like garbage. What was the other one? VIPs. I played this one before. It's kind of squirrely, but again, there's a bull market stock for you. How about Baba? Baba is trying to rally. It slid past the 50-day by about 6%, I'm going to say, maybe 5. And, I don't know, this doesn't strike me as all that powerful, but it could rally further. It could get up, maybe up to if you look at the 40-week line here, what was that? Is that one of the birds that you're next to over there in the nature preserve, Dr. K? You might come into the 40-week line.
100,000 birds that are around here. We're right in the middle of this.
But so you're surrounded by a bunch of bird brains.
As far as the eye can see, actually, I see no signs of civilization all the way out to the horizon. Just a lot of trees and birds, and a big lake off to the left.
I see no signs of nature out to the horizon. Actually, if I look the other way, you look out over the wetlands, so it's a little better. But anyways, what else? What else? Any other brilliant? I'm looking at some like Intrexon. Here's one. Oof, that's looking ugly. You see the head and shoulders bump up? You know, this might be what Netflix is doing right now. I don't know. All the biotechs have gotten slammed. A Biomed. Here's another one. Starting to look like it wants to break down. Maybe this rally is shortable. How about Biomarin? It's another one that's broken down. Look at the head and shoulders there and crack. Now you're looking at rallies as being potentially shortable. Another thing to note about a lot of these patterns is you're in a position, say with this one, where it could spend more time chopping around. So what you're looking for is the next leg down. And I think basically if you're shorting stocks here, or you're trying to test the short side as I've been, and I get, you know, I get a couple of points, 3 points here, I get a couple of points against me, and net it's not really a lot of progress. But what I'm trying to do is I'm trying to keep myself in position for the potential of a new down leg, and the new down leg will be pretty brutal. So if we go back, I'll go back to this. It's going to take a little while. So, but if we go back, let's try and go back to 2012. Oh, it's still got a long ways to go. Keep spinning this baby. Now, here we go. You go back to 2007 and the top in October. So there, where are you? There you are. There's a market top, and you see we're in this choppy range. Now you notice that we kind of look like after making a low, we rallied up once, and we rallied up again. Now we're kind of looking like this, you know, fluttering around the 50-day line on the Nasdaq and the S&P, and you've had one rally and then one break, and now, you know, maybe this is your next leg coming up. If that happens, I'm not saying it is going to happen because you don't know the future. You only know what's going on now. But if that happens, I want to be on that ride on the short side because it's going to be a very nice ride, and that could be a spot where I can pick up maybe 40, 50% in a couple, 3 weeks. So I think that's kind of what you're playing for. Do you place physical stops? I place spiritual stops. You know, it depends. You know, sometimes if I don't want to watch the machine, I just go away and I'll set a stop on my machine. If it gets above this, just blast it out. So I think we're going to roll over. I'm starting to, the shorts are coming off for me, and bing, 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 here we go. Look at some of these. Let's go back to the 50-day. I think one of the advantages of this webinar is real time. Some people want us to do them, you know, after hours because they're at work, and I understand that. But at least you get to see what I'm looking at in real time. And then, you know, sometimes I'm right and sometimes I'm wrong. But you get to see what the thought process is and how you handle the risk. You see Apple now breaking on the 620. You see Facebook looking like it's starting to. Here's another one I'm going to hit right here. This one is still going to follow on networks, but if you look at this on the daily chart, here you go. It's just rallying up into the 10-day, 20-day. That was where it was a short before, and it breaks down, undercuts this low, so that's a little undercut and rally. Boom, you hit that. Let's look at Fortinet. That's another one I've been going after. Here it comes also. Let's take a look. And these are both up there, so you want to watch these. I bet you they both break down together. So Apple's only up 64 cents, so, and I was able to put out about 3,000 shares on that. So we'll see what happens. And I think Fortinet probably comes in from here. But I think your risk here, shorting into this rally right now, if you have stocks that are right near their moving averages where you can find them, your risk is relatively low because you have a close stop right now. So I'm not afraid to dump into this rally, but if it keeps going, I'm out pretty quick. So, you know, it might cost me 1%, maybe 2% if I'm really unlucky. But, you know, you can't operate on the basis of fear. You either take your shots or you don't. If you do, you've got to know where your stops are. And you have to lose to win as well. You have to lose money now and then when you're wrong in order to be on board for the big move when it does come. So, you know, a lot of people have trouble with that. It's like they can't lose any money. I remember one of my old assistants when I was a broker, she actually came to work for us at O'Neill, but when she was my assistant, she had a $5,000 account, and if she had a stock and it was down, you know, $500, she'd come in my office screaming and crying that was her rent payment. I thought to myself, that's kind of bizarre. You really shouldn't be in a position where you're looking at your account in terms of what it will or won't buy based on the change in value on a day. I mean, if I looked at mine that way, it's like, oh, there goes a house. So here, there's two houses just showed up. You know, it's just kind of ridiculous. You just got to look at the percentages and operate on that basis. Remember, I think some of you might remember a couple, 3 years ago, I was talking about, oh yeah, I'm making a Tesla today, or 2 Teslas, or whatever. I'm losing 2 Teslas. Okay, where were we? Fitbit. Yeah, you know, I keep thinking this thing might have a rally, but it doesn't really seem to want to. It's hanging down here like it wants to turn. So there's another one where you're not making money. They're all, you know, dogs, and they're in broken down patterns. Here's Silica. I thought this is one I actually bought. I forget, last week was it, somewhere in here, and then it bops up $1.50, but that's it. You know, here's the pattern on the weekly chart. It's a dog. The oils are dogs. You know, I thought maybe if oil was able to hold this trend line breakout. See, that's one of the better ones. But again, look at it's just not there. You know, is that a bull market stock? I don't think so. And oil, if you draw a line across these tops, it's failing on this trend line breakout, but it's holding on the 50-day. But I got to think that the issues with the global economy are going to override everything eventually. Now, everybody's gotten so used to this knee-jerk response to news that the Fed is just going to keep printing money forever without stopping to think about what does this really mean for economic growth. And can we live on QE fumes for eternity? I don't know. I think some of this excess has to correct, and I think we're in a position where we may be seeing that very soon. It doesn't have to happen right away, but I tend to think that's what's happening if I have to give an opinion. Otherwise, I'm just watching the stocks. PLNT is a piece of garbage. That may be a short. It's an IPO, formed a couple of handles, tried to break out, I guess, here. That was a pocket pivot, but, you know, it just failed, so not happening. Taser, please. Tase who? Taser, piece of garbage, looks like a Head and Shoulders, right? So I guess it could have been shorted on this rally, but it's still well short of the 40-week or the 200-day. And I wouldn't be buying it if that's what you're asking. I'm not sure I'd short it necessarily right here. I don't think it's the right position. Amazon, I'm going to take a flying leap here and tell you should short it using the high of today as a stop. That's what it looks like on the 620. It's about to roll. I think what would really be nice to see would be some sort of dramatic reversal today, because a lot of these stocks are jacking. You know, like Palo Alto Network's up $5 today. I actually held a short position overnight of 100 shares, so happy I didn't hold a big position. Let's see. What else? Let's look at some others. Gimo. What's Gimo? Oh, Gigamon. Yeah, that's a dog. It's way down there though. So, but look again, another head and shoulders. Is that a bull market stock? I don't think so. And just continually breaking down, so it doesn't look very good at all. Avago. Now we've seen all of these move. It's coming up to the 10-week line. You can see that, and you just crossed below the 40-week on a black cross. Black crosses tend to work better on stocks and indexes, just so you know. I think if you can get as close to here to the moving average, you see that 200-day is at what is it at? 123.70, and the 50-day is at 122.78. So they're about $1 apart. 1%. That's close enough for hand grenades and horseshoes and hydrogen bombs, I suppose, in trading. So I guess it could be short. It's in position, you know. And when you're asking me whether you should short a stock, just because I say it's in position doesn't mean it's going to work, and you should not rely on me telling you, oh yes, you should short XYZ and you're going to make tons of money. If a trade is in position, then you can place a trade, but you had better figure out where your stops are and how you're going to manage a trade with respect to your risk and also what your price, your profit objective is on the downside. Okay. Sedge is a piece of garbage. It's going lower. I thought this might have a shot at turning, you know, based on the pod long theory, where you have a hot IPO, it breaks down and zips back to the upside. Something like what we've seen with Shop, for example. But nothing doing. It just can't get going. And the whole solar group remains kind of down in the doldrums. And I wonder with First Solar, see how it's coming right up to this series of highs here? And you can see it on the weekly chart. because this is just a big ugly breakdown pattern, and it's just coming up to this confluence of highs right around 54. I guess if I saw it get up there, I might try to hit it. Maybe you could hit it here, but that looks weak. So to me, that looks like it's more in a position to short than to go long. Same thing, you see SunPower coming along these highs and just under this confluence of lows. So you have overhead here, and this is the top. If you draw a line through this, this is what Wyckoff used to call an axis line, AXIS, which is a line that serves as support and then resistance. And you can see the stock moving on either side. If you look at Palo Alto Networks, for example, this you could draw a line right along here, and you see how that's an axis line, but now it's starting to drop below the axis line. It's right around 170, runs along here, these highs here, and all these lows. So it's also kind of a big neckline zone. So if this thing broke down decisively here, it probably would go through the 200-day and head a lot lower. Let's see, I want to get through some more questions. Any more questions? SEMO, Silicon Motion. Yeah, I remember this stock back here. Somebody was emailing me or something, tweeting me that this was going to be Oracle in 1999, which struck me as kind of a really dumb thing to say, with all due respect, almost moronic, because number one, you have to understand that 1999 was an unusual year. So nothing is going to act like it's 1999. Even though we're printing more money than we did back then, but at least we had a growing economy with the internet happening. And at that time, Clinton and the Republicans who controlled Congress were actually, on a cash basis at least, balancing the budget and producing a surplus for the first time in decades. So, you know, it's not the same underlying conditions to generate that kind of move. And there's really no similarity in Oracle from 99 and SEMO, Silicon Motion, from just back in June. So what this looks like to me is you have a left shoulder, you have a big ugly head, and now you're rallying right up into the underside of this area. You can see some, you know, confluence of lows here, some congestion, and so this would be an area where it might lose upside momentum and roll over. Let's see, any others? I'm just kind of cruising through my list here. You know, the financials have not been doing so well as of late. JP Morgan on a gap down on heavy volume, kind of blip into the upside, might be a short here using the 20-day as a upside stop. You can see the XLF kind of fluttering around, but it's in a bear flag, and it could roll over. And if it did, that would confirm the weakness in the market. Let's see, what else we got here? Wells Fargo came out with earnings yesterday along with Bank of America. And you can see this is looking a little funky, like it might want to fail here, and it's in a bear flag. And you can see, look at this pattern. There's a left shoulder, a big head, with a big right shoulder. And this is like a hunchback of Notre Dame type of head and shoulders, where the left shoulder is so far below the where the left shoulder and the head have formed that it's all kind of leaning over to one side. And you see how it rallies right into the 10-week line. So remember also, if when you're going through your short sale watch list, you want to be able, as I have this set up here, because I'll flip through stocks really quickly on a weekly and a daily chart. So I'll set this up and I'll have my list, you know, and I'm just clicking through the stocks and checking where they are very quickly. So I can go through my short sale list real quickly. So for example, you know, and I might even throw a 620, I have the 620 over here, and I can rapidly cruise through everything and see where things are and be able to reference that. Okay, you can see NXPI is starting to roll over. That may be a short here. Market's coming in, Dow's up 46, so it's cut its gains in more than half. And yeah, I think when you start a new down leg in the market and things get really ugly, you'll get some really funky, dramatic days. And so I like to joke that this market needs some drama, and that's the sort of thing I'm looking for. And you get it on the downside. It's just big rally. Everybody's excited because the Fed's never going to stop printing money, because the economy sucks so badly, and everybody gets excited. You see everything jacking to the upside, and then it reverses and blows up. And all the idiots who bought stocks on the basis of a one-day wonder rally get hammered. So, and if you're smart and you're waiting for your shot to come in short, boom, you get it. And so you have to be vigilant, and you have to be persistent. So NXPI looks like it's going to roll over. Let's look at a few others. This is starting to roll over too, Skyworks Solutions. It's in a low position, but let's go back to Facebook now. And we can see it's definitely starting to roll over. Apple, again, has been a clean rollover. I like UA. I actually short that around 99, I think. I have to check to see what my fill was. but that's starting to break down, and that is a late stage failed base, potential down to the 200-day moving average. Cyber, what's that doing? You know, I still have, that's breaking in. See that? And this was a short up here around, see how it found resistance around the 200-day line up here last week, and now it's starting to break down, so that's looking pretty good. Market's coming in pretty fast now. This could get gnarly. Let me check some things here real quick, see where my orders are. Yeah, I'm I'm about 198% short right now. Still got 200% to go though. We'll see if this works. I don't know. It's starting to work. That's always when I get most nervous though. So we'll see what happens here. I told you guys last week, one way that I'll handle the short side is I'll look through the stocks I want to go short. So maybe I got 6 or 7 that I want to test. And as they're rallying, I'll set limit orders to short on the way up, and they'll go off, boom, boom, boom. And then if they keep going, I just run for cover. Once I've got, I feel like it's pushing against me beyond my limit to portfolio, or risk to portfolio. I'm sorry, about 2%. Yeah, I've been known to let it slide a little more. So, but so far by the book today, we'll see what happens. You know, I've done this a couple of times, and I've gotten made some money. I've done a couple of times and lost a little money, but net, it's really been nothing to speak of. And we'll just see where this goes today. Yeah, I gotta think at some point though it's gonna hit. Okay, where are we? Some others. Let's look at. I'm just gonna plow through these. AYI, that's been holding up. You see the pocket pivot down here? That's a tough one to buy though, because you got all this overhead, but it is able to just plow right through that. So market's up 35 and just 34 coming in. Nasdaq up 17. So all the gains have been cut in half. IWM goes red, somebody points out, and it is turning red. So I mean, I think that's telling you this market's in trouble here. So you want to be hitting the shorts here. Keep your stops in mind and just slam it. Let's see. I'm going to set this up so we can look at everything. Isn't that pretty? I have to say, one of the things that really got me excited when I became a stockbroker and you learn about all the products, I didn't really know that I was going to be focusing on stocks. But once I saw charts, I read O'Neill's book and I saw charts. Oh, that was it. I love charts. They're better than porn. Well, maybe not, but they are beautiful things. Right, Dr. K? I mean, as a PhD in physics or chemistry, nuclear chemistry, charts to you are also a beautiful thing, right?
Well, yeah, I mean, I think that story about it was 1990, and I'd been processing Bill's book, How to Make Money in Stocks, and it seemed arbitrary, and I didn't take to it at first. And I remember I had a daily graphs with me. I took it wherever I went, like if I'm grocery store in the line, I'd go through charts. So over the ensuing months, something clicked. And I remember I was driving down University Avenue, and I don't know, I was in the middle of traffic, and it clicked at that point. I had my eureka moment, and I immediately pulled over to the curb, almost caused an accident, went to the chart book, and I started flipping through it very rapidly, and it was like, oh my gosh, this is amazing. I get why this guy is worth so much money. You know, everything came together, and that was that was actually a really exciting moment in my development as a trader.
Yeah, charts are cool. When those books too, when I had those daily graphs books, I used to love to just flip them with my nose in them just to get that smell. I love that smell. Let's see, market up 24. We're coming in. You guys see that? I mean, in real time. I was joking with Dr. K that we might see the market roll over during the middle of the webinar, and sure enough, I'm watching Facebook. I got a short position out there on this. Sometimes there's two ways to handle these. You can hit the break here when it seems to, because you'll notice, look at the MACD. If I can make this bigger, let me see. I usually end up screwing it up. There we go. You can see the lines here. Okay, when it rallies like this, you get a big MACD, but notice how, as it's making this high here and it's breaking out, I've often noticed that stocks that failed in the middle of the day, they'll break out on a 5-minute chart because that's how the market makers or the smart money, the algos, whoever, suck everybody in. But what you'll start to see is you notice how the MACD lines are actually negative and the MACD's crossed even as you're breaking out. When I see something like that, then that is where I'll actually fade that breakout and start shorting it once it starts to break the 6-period line, which is an orange one, which it does here. And then you can either follow up with a break of the 20-day, or you can wait for the 6-period to drop below the 20-period. Okay, so remember the blue line is a 20-period moving average exponential. The orange line is a 6-period exponential, and then you have the MACD set up same way, except with it's a 629 and C on E signal, and that is a correct 620 chart. Although you can have slight variations, not that big of a deal. It's not an exact science. It's just a guide. But these are a couple things I've learned from forex trading, and I've told you guys that the markets since QE has come into effect, and mostly over the last year or two, have started to trade very much like forex markets. And breakouts, a lot of times breakouts tend to be false moves in forex for anybody who trades forex. And I've learned to apply that to stocks because stocks trade that way now. Does it make sense given that QE seems to dominate the picture? I love the bird sound effects in the background there. That's pretty cool. Anyways, I should bring my cockatiel up here. He can call you all bird brains. That's one of his favorite things. He says, "Hi, bird brains, get a job." That's what we taught him to say. I also try to teach him some other things, but for some reason he doesn't like to cuss. Let's see. Anything else here? Anybody have any more questions? Because we're about to sign off. It's 8:58. Maybe we've got 3 minutes left. I mean, you can see. Let's look at Smelgene. Smelgene, kind of hovering, but you notice the same kind of pattern though. Your big thrusts, and you're just seeing this all over, and the MACDs are starting to fail here. So it looks dicey. Cheesy and dicey. Dice cheesy. I don't know. It just, this market's just screwed up. And this kind of move like today, it doesn't seem to make any real sense. It's like everybody's suddenly buying stocks like there aren't going to be any stocks tomorrow, so you better buy them all now. And it's just kind of weird. And to me, it seems like it's manipulated, like somebody just loads a bunch of juice into the algo machines and lets them run amok, for a while. And then once they run out, that's it. So anyways, Starbucks. Starbucks actually had on what I call my Gilmo short 50 index. Look at that starting to break down. That's one to watch. See, that was a leader, and maybe that fails. Let's see, what else? Twitter. Let's look at Twitter on an intraday basis here. What's going on? See the 620 sell? In this rally, there's been all this news, that what's his name? Who's the guy who was the old CEO who's now back, and everybody's worried about the fact that he's trying to be CEO of 2 companies at once. But I don't know. Then you had Prince Al Walid bin Talal or something out of Saudi Arabia, who seems actually like a really nice guy. Well, probably a lot of fun to party with because he has so much money and he looks like he likes to have fun, or at least from what I've seen where they interview him and show where he lives and everything. But he's notoriously bad about buying stocks that are cheap. I remember in 2008 he was buying Citigroup at 28. So where's Citigroup today? Citigroup is well, he's made some money on that eventually, but it went a lot lower. It went to like 5 or something after that. In any case, just because he's buying something, my point is that just because he's buying something doesn't necessarily mean it's going directly higher from there. It could go a lot lower. And he's probably hoping that someone's going to buy them out. Anyways, Asia and Europe were up strong. Yeah, that's kind of old news now. Dorsey is the guy. Thank you. Let's see. So, we're floundering around, watching the 620s. If everything starts to fail, it's starting to. So it's actually gotten me short. And I guess we'll just see what happens. I mean, last week I got short, and I ended up making some money earlier this week and yesterday. But again, it just really hasn't been big money. And that's what I'm looking for. And the question is, okay, if we look at this market, to kind of sum up here, is that if we think this is a market we want to buy into, okay, where are you going to make big money if you're not bottom fishing? there really is nothing that I'm seeing. If you guys see something you think has a compelling theme, has a strong technical pattern, it doesn't necessarily have to be breaking out. We prefer the roundabout type formations or whatnot. I know somebody was mentioning Wayfair, which is a food stuff, but you know, is this rounding out? Yeah, but is it a quality stock? No, they lose money. So is this a food? No. They sell furniture online. Sorry. CEO of Twitter should be Gilmo. Someone says, I don't know. I don't want to be a CEO. That's a real job. I don't like real jobs. They scare me. But you know, they're not there. So if I'm not seeing that, then I have to conclude that we're probably not in a bullish market. We're probably just in a rally within a bearish market, and eventually we're just going to blow chunks and head to the downside, and that's what I'm going to play for. And I'm just going to keep working it until something works for me and try to keep my risk to a minimum. And that's basically been my approach. And you know, if I wanted to, I could cry about not making a lot of progress, which I guess maybe I do sometimes. But the reality is you can't really, because you're just trying to work and you're trying to be, as I like to say, in the saddle when things fall apart, and that's all I'm trying to do here. And you know, I might lose a couple 3%, but if I can keep it to a minimum, that's fine. You start losing 10, 15%, now you got a problem, and you really shouldn't let things get that out of hand. Remember, if something doesn't work, you can always cover, go away, and then try it again later. So you don't have to sit there like a moron and let your head get ripped off. Anyways, oh, somebody says C had a huge reverse split. What was it, like 5-1 or 10-1? Yeah, so he's still losing. Okay. So C, that proves that even in the long-term basis, he's not that smart. He's just got a lot of money. Anyways, I don't have anything else. Is STX a sellable gap down? I don't know. Oh, wow. Look at that's pretty grim, isn't it? Well, that was shortable yesterday. I guess you could treat it that way if you wanted to. I'd be, with so many things rallying into resistance, I think I'd be looking in that direction, looking at stocks that are rallying. So I'm looking at, you know, the PANW is rallying here, and maybe it rolls. A Facebook it's trying to come out, but you know, it's bumping now, so we'll see what happens. Apple starting to roll. What I would do is probably try to go after these. If you look at STX, it's down at the prior lows of the day. Is this before the, oh, that was before the opening. It tried to rally with the market, now it's rolled over again. You had to hit it earlier, I think, if you were going to come after this. So I think what I would do is focus on names that are in position to short rather than trying to chase something that you don't know. Yesterday, Intel looked like it was going to blow apart, and what happened? It reversed. But see, it's not in any kind of bullish pattern, rather. It looks kind of grim. Anyways, that's all we have. Hopefully this has been helpful. Get an idea of what I'm looking at, what we're looking at today, and we'll see how things pan out. You know, so you want to remain calm, remain methodical, run your strategy. If you're stopped out, you're stopped out. That's it. And but hopefully you can get into position if something does break. And the market seems to be faltering a little bit with the market. And I'd say most of the index is giving up there. Well, the Nasdaq a little less than half of its earlier gains, and that doesn't look too good. And you're trading a fair amount of volume, I believe, for the day. What's the volume level, Dr. K? Are we high? Yeah, we're
Yeah.
higher, but not, yeah. So we'll see what happens. All right, you guys. So have a great weekend and good luck. We'll see where this thing pans out. As I said, I don't really see this as a bullish market, but it can also just futz around and do screwy things for a while before it breaks. So. And I think I pretty much covered how I'm approaching the market right now. So anyways, that's all. We'll catch you next week. Take care.
So long, everyone.